Good afternoon, everyone. Thank you so very much for joining us today. It is March 1st, 2017. My name is Randy Wostrowski, a director here at the Spectrum Group, and I'm joined by my colleague, Carrie Runyard, one of our consultants. We're very glad that you were able to join us this afternoon to go through some of our most recent market index data from our affluent and millionaire investor confidence indices, as well as review some of the key findings from our recently published Q4 research with wealthy investors relative to their portfolios, their products, and other things similar. Just to kick things off, it's obviously been quite an interesting day in the markets, with the Dow currently still over 300 points right now, another record high, over 21,100 at this point in the day. It doesn't seem to be stopping on the heels of the president's speech last night and some of the optimism that called for. Additionally, tomorrow is a very big day for the IPO market. We have Snap coming out with their IPO, what used to be Snapchat, that is now Snap Inc. People are talking right now that it's going to price on the high end of the scale, and people are anticipating that it's going to be the biggest IPO of a U.S.-based company since May of 2012. So yet more interesting things to follow in the marketplace. Just a little bit more on the agenda after I go through the insights in the portfolios. We are going to talk about the High Net Worth Insights newsletter that we offer to our clients, and as well as answer any questions that you have. You can do that at the end, but you can also submit your questions throughout this webinar. On the right-hand side of your screen, you'll see in the gray box an area to click on that says questions. If there's anything you'd like to ask, please feel free to click on that and type and submit your question. So we had, from January to February of this month, we went down 2 points. But year over year in the Millionaire Investor Confidence Index, we are up 8 points, which is a good thing. To end currently the overall Millionaire Confidence Index is at 10. The Affluent Investor Confidence Index, which traditionally lags the Millionaire Index, continues to do so this month, ended the month at 7. It is down 1 point since January. It is up 10 points since February of the same time a year ago. On this next chart here, we can kind of see a little bit of the tracking. There's been not any sort of linear rise throughout the past trailing 12 months in the Investor Confidence Index numbers. There's been quite a bit of fluctuation, as to be expected over this past year, and especially in the past 4 to 5 months with all the political discussions relative to the election, and then in the couple of months since. Going on to the next page, this is our household outlook for February of 2017. We can see that it did dip just a little bit this month, but it is still up quite a bit from 12 months ago. This is a measure of 4 different aspects that folks consider part of importance to their financial lives, and again, has fluctuated a bit recently. But it is up quite a bit since February of last year. Here we see the different components of the household outlook. The overall outlook, again, is down just a small bit, just over 1 point, ending the month at 24.9. One component, household income, is up a little bit here in February. All of the other components are down, with the economy just over 5 points since last month, company health down just over 1, and household assets just over 2. It's important to note, though, on the right-hand side, you see 5 up arrows when compared to 2016. The overall outlook up almost 20 points compared to February of 2016, especially highlighting looking at where the economy is. Almost 40 points higher than at this same time 12 months ago. So there's been certainly a significant amount of up and down for all these different components, but compared to 12 months ago, you can see a significant rise in a number of different components. Here we have the story in the news most affecting the economic outlook of both the affluent and the millionaire investors. It's quite striking to note that most months there are at least a couple of things here that you'll see quite a bit of a discrepancy. Not too much this month. Very similar among both the affluent and the millionaire about what is most affecting their economic outlook. With the political environment at 53% for both the affluent and the millionaire. I think that interest rate increase is still only 6%, the third of these 7 different choices right now. That's something that will come into play more next month, just based on some of the recent conversation among Federal Reserve presidents saying that it's more likely that there will be a rate hike in March as opposed to May, which was the initial thought going into this past month. Here we can see that specifically the story most affecting the economic outlook, although it is the political environment first and foremost. Compared to November of 2016, it has gone down quite a bit. There are still a number of folks across the board who do think that some of these other areas like stock market conditions, again, and interest rates are affecting their economic outlook right now, but it is still the political environment that has dominated these past 3 months since the election, when it was almost everyone citing the political environment as the story in the news most affecting their economic outlook. Talking about certain preferences among affluent investors relative to their product usage, saw a little dip in the stock ownership here and a little bit of a rise in the bonds. Cash is almost flat month over month. Stock mutual funds have risen actually the past 2 months. And then you have bond mutual funds, again, flat just a little bit. Real estate there on the bottom right has increased just a little bit in the past month since the January index data came out. So now I'm going to hand it over to Carrie to talk about what's inside the portfolios of America's wealthy investors. Carrie.
Good afternoon. Thanks for joining us. As Randy stated earlier, this research comes out of our 4th quarter research with our wealth segmentation series, which we do our surveys with those with 100,000 to 25 million in investable assets. So the first thing you're going to see is the distribution of assets in general. The largest portion of the affluent investors' assets are investable assets. And you can note that as their net worth increases, the percentage of investable assets increases quite dramatically as well. And on the other spectrum, as their net worth increases, the percentage of their assets that are in their principal residence decreases. And talking about the investable assets that they have, equities comprise the largest portion of it for all 3 segments, but specifically for the ultra high net worth, who have about half of their investable assets in equities. The other large component, especially among the mass affluent, would be short-term investments. That component decreases quite a bit as the wealth increases. So talking about the equities that these affluent investors are owning, individual U.S. stocks are the most common, followed by U.S. stock mutual funds, and then foreign and international mutual funds. You can see here as well, that relates to the previous slide, that again, as your wealth increases, the percentage of equities owned in all categories rises quite significantly.
And also, Carrie, one thing that I think it's important to note here, this is truly kind of an example in a tangible way of the rich getting richer, because the rise that we've seen in the stock market here since the end of the election cycle, and in particular in the past 5 to 6 weeks, is truly rewarding those that are still active in the U.S. equity markets. And you see a very striking difference there between the mass affluent and the ultra high net worth. Almost a 30% difference in the amount of mass affluent investors who currently own individual U.S. stocks or U.S. stock mutual funds relative to their ultra high net worth counterparts. And even going all the way to the right-hand side of the screen, you can see the ultra at almost 40% of the ultra net worth investors are currently invested in domestic ETFs. Many ETFs have seen significant gains as well in the past 5 to 6 weeks. And as you can see, the mass affluent certainly not as inclined to take advantage of those gains in the market.
Okay, moving on to the ownership of their alternatives. Again, kind of same thing we've been saying with everything else. As wealth increases, the percentage of investable assets that are in alternatives increases as well. The largest percentage among all three segments would be in collectibles, and that can be anything from art to coins, and then followed by precious metals. You will see too that almost 10% of the ultra high net worth are invested in hedge funds as well. Okay, so we've seen now what they are currently invested in. What do we believe they're most likely to invest in the next 12 months? So according to the investors that we surveyed, individual stocks, mutual funds are the most common investments among the millionaires and the ultra high net worth. These categories are high among the mass affluent as well. However, the mass affluent are the most likely to be investing their funds in their checking and savings accounts and leaving them a little more liquid. And then to find out where they are planning to invest, we asked them which regions they were most likely to invest in the upcoming future. And China, Canada, and the UK were the countries in which the wealthy investors indicated they were most likely. You will note that over half of wealthy investors indicate that they do not want to invest outside the US at all.
Here's just a little snapshot of what our High Net Worth Insights newsletter looks like. As those who are familiar with our monthly webinars might be to seeing some of the different things we try and present towards the end of these discussions. The High Net Worth Insights newsletter is a monthly publication that includes a lot of the information that we went over today, that it includes a lot of our ongoing research with wealthy investors, as well as data from those proprietary indices that we reviewed at the start. It's something where we have a number of different types of subscriptions available. These are publications that we've made quite robust in the past 12 months and have really kind of bulked up the writing and the content, the insights within. So we do hope that there is some interest in taking advantage of subscriptions to the newsletter, whether on an individual or enterprise-wide basis. And right now we encourage you, if there are any questions at all, to please go ahead, type those questions in, and we will give you some time to decide if there's anything that Carrie and I can answer. It doesn't look like there are any questions at this time. So I once again want to say thank you so much for joining us today for the readout of some of our recent insights with wealthy investors, as well as our investor confidence indices. Please don't hesitate to reach out to myself or one of my colleagues here at Spectrum to learn more about everything that we have currently ongoing, as well as everything that we plan to publish later on here in 2017. We hope that you join us again next month for our monthly webinar, and we hope that you have a wonderful day. Thank you.